Hey guys, and welcome to another video here at Fiscal Voyage. I'm Felix, and in this video we're gonna do a 5-minute stock analysis on Tanger factory outlet centers. This video was suggested by Zach. Thank you, Zach, for suggesting this company. So with that, we're gonna do a 5-minute stock analysis of the company to determine if it's a buy, hold, or sell at current prices right now. Okay, this is the 5-minute stock analysis on Tanger factory outlet centers. Could be found in the New York Stock Exchange as SKT. The company is a real estate investment trust, or REIT, which is headquartered in Greensboro, North Carolina, that invests in shopping centers containing outlet stores. As of 2017, the company owned 36 shopping centers comprising 12.9 million square feet and over 2,600 stores. The company's largest tenants are Gap, Ascena Retail Group, Nike, PVH, H&M, and Ralph Lauren Corporation. All right, let's look at the fundamentals. From 2009 to 2018, the company grew revenue at a compound rate of 6.88%, which is a respectable rate. Net income, however, was a negative 3.02% from that same time period. Currently, the company has a credit rating of BBB. Operating income from 2009 to 2018 compounded at 9.47%. Also very nice there. With REITs, we need to look at funds from operation growth instead of earnings per share. So with this growth rate of funds from operation, it grew at 6.90%. And actually, the past 5 years has been growing a little higher at 8.04%. And the past 5-year revenue has been decreasing compared to the 10-year of 6.88% to 4.26% for the past 5 years. If we continue with the fundamentals, for 2018, funds from operation came in at $2.48, net margin at 8.58%, which is much lower than the 2017 of 13.68. However, the past 12 month, trailing 12 months has been 24.32%, which is more in line with their previous years. The debt to cap at 77%. Since it's a REIT, they tend to have higher debt to cap ratio, so this is normal. Current dividend yield is an outstanding 9.24%. So basically, just for buying shares of this company, you're already making 9% in return annually, with a payout ratio of only 63%. And the thing is, with REITs, they're required by law to pay out 90% of their earnings. So this is very low. So this is great that the dividend payout is very low, so that means it's safe with this current payout ratio. And they've been growing dividends for 26 consecutive years, which is great, with a 5-year dividend growth rate of 8.54%. However, the most recent increase was only 1.4% last February. And so we're expecting another increase for this February, or next month. So we'll see how that goes. And with a charter rule, the company has 17.78, which is the 5-year dividend growth rate plus the current yield gives us 17. So this is much higher than a lot of REITs, which you would like to see a charter rule of 9 to 10 because of the higher dividend yield but lower growth rate. So, but with this, we get 17, which is outstanding. And note that the 5-year dividend yield average is only 5.13%. So you're almost getting double of the yield versus the 5-year average. So that right there tells me that the company is very undervalued. But we'll look forward to a few other slides to see how undervalued it is. Analysts expect 2019 funds from operation to come in at $2.25, which is lower than the 2018 of $2.48, and 2020 coming at $2.17. So it's a downtrend in funds from operation. There's a lot of things going on with the retail space. Stores closing and things like that. So that's why this number is decreasing. But it still has the company payout ratio much safe. So I'm not concerned with this right now. And CFRA has a projected FFO compound annual growth rate of 1%. And my dividend-driven return model projects 14.4% return going forward. Most of it is coming from dividends, the 9%. So that's great there. I like that. I like to see companies 9% or higher, and we're getting 14.4% return. If we look at the current price to FFO, which is 6.86, forward at 7.1, this is of course because of the lower funds from operation reporting expected earnings. And the 5-year price to FFO average of 12.6. So even though earnings, funds from operations is expected to be lower, it's still undervalued in a sense of price to FFO compared to their 5-year average. So we look at the fast graph here. The black line is the monthly closing price. The red is the FFO of 15 multiple, and the blue line is the normal price to FFO of 15.38. As you can see here, the black line is below both of them, which represents a undervaluation. So that is very nice, but as you can see, the earnings are expected to be slightly lower for the next year or two. If we look at the fair value price chart here, CFRA has $13 price target, Morningstar fair value is $17.58, Fast Graph, as we saw, $32.47, Yahoo 14, and my dividend discount model analysis at $20. Averaging out to 5, we get a fair price of 19.75 cents. Currently, the company goes for $15.37, which means the company is undervalued by a whopping 28.5%. So that's a very, high safety margin there that I like to see as over the 10% that I like to see for margin of safety. So 30% almost undervaluation is great. So with that, I recommend the company as a buy. I love the dividend yield, it's great. I love the fact that the company has 20 years of dividend growth, and they grew their dividend during the 08-09 recession, so that's great. So that's very strong there. What I don't like is the flat, funds from operation is lower than last year, and expected to be lower, not dramatically, but lower the following 2 years. So that's a little concerning there. But even though it's lower, the dividend is still safe, so you're still making 9% in annual return. I actually own shares of this company, and currently am down, negative 13%, but that's okay. I'm still holding the company for its dividends and its growth of dividends, so I'm okay with this for now. I mean, if I didn't have shares, I would definitely be buying at this price, so that's why I have my recommendation as buy. So there you have it. If you have a company that you'd like to see next, please let me know in the comments with the company name and the ticker symbol. Thank you for watching, and if you find this video informative, please hit the like button, subscribe to my channel for more videos like this. Don't forget to check out my portfolio. There's a link in the description below. Thanks, and have a great one.